two legendary hedge fund managers sounding a bullish note on the markets to CNBC earlier today. Appaloosa Management co-founder David Tepper telling CNBC that he loves riding a horse that's running and that he has been long the market and will continue that way. Meantime, fellow hedge fund manager Stanley Druckenmiller parroting the rodeo theme, also saying he is, quote, still riding the horse and is bullish immediate term. Mike, we haven't asked you if you like horses.
I don't mind horses. I don't have any irrational fears of vegetarian mammals who don't want to hurt us.
No, but they're powerful and unpredictable.
They're a lot bigger than
they are, without a doubt.
Which is, I think,
which is why they have to be respected when they're running, and if you get to basically use them to get somewhere, they're useful.
Unless you're well-trained. Oh, no, I guess cowboys don't herd cows. They herd cows. Let's ignore that. Sure. Anyway, they can stop all of a sudden, though, for unexplained reasons.
They can stop and become unpredictable. And look, I do think that neither David Tepper nor Stanley Druckenmiller have gotten to where they are by fighting the tape. And this is a typical don't fight the tape move. The market has wanted to go higher. If you've already been long, there's no reason to panic out. The longer-term trends seem like they're pretty well intact, even if everyone's getting a little bit nervous about how easy it has seemed for a little while. So I think this is in tune with what we've been hearing from the market. And David Tepper, I mentioned earlier as well, is a credit guy at root. That's where he started out in high yield and things. If you're looking at credit indicators, you don't really have too many reasons to worry at this point, unless you feel like it's just simply too good to last. But the market will tell you that if we change.
Lindsey, I know earlier you were saying you would be okay if we saw a little bit of a pullback here, and we all look at history to help us try to predict the future. But we haven't been in a stretch like this for a long time, so it may not necessarily be ending. I mean, good news can be good news, can it not?
Yes, it can. I also, though, think, to your point, Mike, I also think these two gentlemen, they don't fight the Fed either, and I think that was a big thesis behind getting more involved at the end of last year. I think it was David Tepper said that. So the easy money policies that we're currently living with, not only domestically but around the globe, are certainly helping to fuel the fire that we're seeing in the market. But ultimately, I think fundamentals are going to have to prevail at these valuations.
Sylvia, some closing thoughts. What's your top sector pick for the year ahead?
Yeah, so, I'll throw in my triple crowns, and I think that they're in the fields of, or in the sectors of technology, semiconductors, and the consumer. The consumer spending, we continue to see these new names hitting the Trillionaires Club, China deal, semiconductors, 5G, all of that is poised for really good things in tech, semiconductors, and the consumer will buy it.
Sylvia, thank you for that. Lindsey, thank you as well for joining us. Great to see you both.
Thank you.